The Royal Bank says that the average family will pay $3,000 more in inflation and higher interest rates.
Attacks on the Bank of Canada aren't just coming from Conservative leader Pierre Poilievre anymore. The NDP is chiming in too.
Those increases are going to mean people are going to hurt. And put bluntly, it's going to mean a very likely recession where hundreds of thousands of Canadians are going to lose their jobs.
This month, in an exclusive interview with Global News, Central Bank Governor Tiff Macklem explained the need to raise rates.
By making borrowing more expensive, people are going to borrow less, spend less, and save more. And that's going to take some of the steam out of inflation.
Singh says our central bank should become like the Federal Reserve in the U.S., which has a dual mandate to tame inflation and promote maximum employment. But economist Armin Yalnizyan says the national jobless rate is already lower than most have seen in a lifetime.
We're looking at labor shortages that we haven't seen in half a century.
This former political science professor warns against the central bank bowing or being seen as caving to political pressure.
If you undermine the Bank of Canada, what will happen is that you may have the kind of financial crisis that Britain was just thrown into.
That's because investors trust the central bank more than elected officials. The institution is independent, tasked with maintaining price stability. It stands to risk losing investor confidence in our bonds and stock market, like they have across the pond. Straying from the playbook other central banks are following would also devalue our currency.
So it will probably lead to a dramatic decline in the value of the Canadian dollar. And if you think that that's going to help fight inflation, you're wrong.
Investors and economists expect a 75 basis point rate hike from the Bank of Canada on Wednesday. But our central bank is already one of the most aggressive in the fight against inflation. Gaviola, Global News, Toronto.